Here with our trades today is Gradient Investment Portfolio Management Consultant Mariann Montagne. Welcome, Mariann.
Thank you, Kelly.
It's great to see you again. Let's start with Foot Locker, which is on pace for its second worst month of the year, and there have been a lot of them. It was down 40% in May, driven by last quarter's earnings. Profit margins have been battered by shrink or theft and high promotional activity, and the company is in the middle of a reset that involves closing 400 locations. Mariann, are you picking this one up for a turnaround?
Now, this is a trading vehicle. It's not really a long-term hold, which is what we at Gradient are more interested in. And I think until the municipalities and the states get tougher on crime, they've got to reverse course from recent years. This is a company that's quite vulnerable to the mass grab and go. But just given the Dick's report today and the general lack of interest in apparel, especially casual type apparel, we'd just stay away from this name.
All right, and calling for, kind of more vigilance all around for some of these retailers who are affected by shrink. Foot Locker shares, by the way, down 4% today in anticipation of these results and after what we heard from Dick's. Let's move on to Urban, which is the owner of Urban Outfitters, Free People, and Anthropologie. And it's also on pace for its worst month of the year, but still up 45% since Jan 1. Not too shabby. Investors are watching how much pricing power, how much price increases the consumer can handle, and how well Urban can manage inventory coming out of the gluts we saw last year, Mariann. Would you be a buyer? I'm thinking no if you think no one's buying apparel these days.
Well, again, it's a quarter that would have easy comparisons. And I think they've been telling people that sales have been accelerating as the quarter progressed. But it's really about the outlook. And I think we're going to have some of the tailwinds turning into headwinds here. They've been doing very well on the special occasion and the vacation type of apparel. So I don't expect the past quarter to be an issue. But with that run up, I think the shares are fully priced, and I would not be a buyer here.
Not a buyer. But I see what you're saying, that the bigger concern would be the athleisure. We're all trying to get out of the sweatpants and into something a little more fancy.
We have.
Yeah, that will help Urban, perhaps. Still not a buyer of this stock. So let's leave retail behind. You don't want it. Let's see about the home builders and Toll Brothers in particular. This sector has been red hot, but Toll is looking at its first negative month of the year. After all, we're near 25-year highs in mortgage rates and 25-year lows in housing supply. And builders are trying to look to alleviate prices for buyers. What do you do well, I'll ask you for Toll in particular here, up 52% since Jan 1.
Yeah, again, it's doubled since its lows in 2022, and it's facing a period when affordability for homes is very low. If you look at the mortgage rate of 7.25% last week, and you look at rising prices, the odds are, again, we're facing headwinds here. If you look at the overall macros, we're looking at continuing jobless claims to start going higher versus lower by a great amount the last 3 months, along with those payments that are going to have to be reinitiated on student loans. That's pretty big macro headwinds. The company's been augmenting or helping out the buyers on the interest rate side, but I think that's only going to cut into margins. And then if you look at the indexes from the National Association of Home Builders, you will see that the new home sales index dropped 6 points to 50. And even more telling is the traffic for new home buyers has dropped 6 points to 34. So we don't own Toll in any of our portfolios, and we're not about to start right now.
All right, maybe we'll bring you back for a different week of earnings. See if we can get a few more names in the mix that you like. Mariann, thank you so much for your time today.
Thank you.
Appreciate it. Mariann Montagne with Gradient Investments.